The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service Advanced Technical Analysis course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Hello everybody and welcome to another installment of the live advanced technical analysis course. This is webinar 9. It is the final week of this 12 webinar series, and in today's webinar we'll be discussing some interesting topics around technical analysis, fundamental analysis, and also looking at sentiment analysis with the primary view to considering bringing all of these approaches into your overall strategy when it comes to trading the markets as well as analyzing the markets. Forex Academy is an online provider of educational facilities to traders of financial markets and cryptocurrencies. All of the content that you will be viewing in the Advanced Technical Analysis course is educational material with the purpose of introducing you to the tools, techniques, and methodologies, and hopefully these in turn will be incorporated by yourselves and contribute towards an improved ability to both analyze and trade instruments in the financial marketplace. Just a few pieces of housekeeping before we begin. Please feel free to ask any questions throughout the course of the webinar. You can locate your chat box on the right-hand side of the screen. I will obviously be able to view your questions. This is a live webinar. It is being recorded and will be placed in your members area once the webinar has concluded. At the end of today's session, as always, we'll be hosting an extended Q&A session, and this will allow you to ask any additional questions and also provide us with some time to perhaps go into a much more involved discussion on any topics that are raised. This week we'll follow the usual course material in terms of the timetabling that we've seen over the first and the second weeks, whereby today, tomorrow, and on Wednesday we'll be covering the educational material, introducing you to the topics as well as considering how to apply these. We will end the week on Thursday with the third of the 3 workshops. This will be an end of course workshop, and this workshop will not only focus simply on the material that we've covered in the 3 previous webinars, it will look to incorporate a number of tools and techniques that we've covered over the entire course to simply illustrate how you can consider using technical analysis to develop a more disciplined approach to the markets. Okay, so what will we be covering in today's webinar? We'll firstly take a look at a discussion around technical analysis, trying to answer the question, why use technical analysis? We'll then touch on fundamental analysis and look at some considerations in terms of why you should be applying these. There's always a challenge in terms of understanding why the markets are moving. We'll look at some ideas and thoughts about being able to stay abreast of the fundamentals. You need to ask yourself a very important question at the outset. Are you a technical trader or a fundamental trader? We'll look at some thoughts around this question. We'll then move our discussion onto sentiment analysis, try and answer the question in terms of overcoming the difficulty and the challenge of being able to gather information relating to sentiment. Very important that you understand what the impact of sentiment is on the market. Asking yourself the question, what is the market up to? And that will then conclude our discussion in today's webinar. Now, as a trader, not just yourselves, but all traders, they need to decide what approach they will apply to financial markets. So you need to ask yourself the question, am I a technical trader or a fundamental trader? If you decide to base your decisions on a applying technical analysis tools, then you should be asking yourself the question, how can I include fundamental analysis into my overall approach? In our opinion, it is better to incorporate both technical and fundamental analysis in your trading. Remember, though, that a clear decision has to be made in terms of what is the more dominant tool with respect to making the actual decisions when it comes down to trading. We're not suggesting that you apply a 50% weighting to fundamental analysis and 50% weighting to technical analysis, because a lot of the time these two stories, let's call them, contradict each other. The approach that we will consider applying in terms of suggestions is, for example, if you were a technical trader, in other words, you're basing your trading decisions principally on your technical analysis conditions, then either prior to or once you've actually taken the trade, you need to be able to evaluate what is actually driving the market to see whether the underlying fundamental conditions reinforce the view that you've taken on board. If you are a fundamental trader in terms of basing your decisions on fundamental principles and fundamental drivers in the market, then that type of trader could use technical analysis to fine-tune their timing element in terms of, for example, when to execute the fundamental decision. So what we're suggesting and what we'll be looking at over the course of the next few minutes is incorporating both approaches, but at the outset you need to establish yourself as either a technical trader or a fundamental trader. Sentiment analysis is about understanding the market's opinion, its bias, and what emotions and attitudes appear to be driving decisions. We'll look at some topics around sentiment and also how we can stay on top of the sentiment readings. In our view, once you have a better understanding of being able to extract information in the market relating to sentiment, we believe that the wise approach is to apply all three topics into your market strategy and your market analysis. Let's start off by looking at answering the question, why use technical analysis? Retail traders, such as yourself and ourselves, are at an inherent disadvantage. We lack information and access to information, and we also have a shortage of skills. If we compare the retail industry or the retail sector to the financial institution sector, such as banks and hedge funds, these organizations employ highly educated and skilled individuals, and they can range from as small as 5 to 10 traders and analysts within a, let's say, relatively small hedge fund to hundreds of individuals, whether you're looking at a major investment bank or one of the larger hedge funds. There must be a reason why these financial institutions hire or employ these highly educated and skilled individuals, and also remember, pay them vast sums of money too. That is because they are deemed to be able to provide and offer value to that organization. Because we lack the information, the shortage of skills, the access to all of the various aspects that make up a comprehensive list of both analyzing and trading markets, we need to focus on what our best strategy is against this backdrop. And that is really to develop our own set of skills and disciplines so that we can, very importantly, formulate our own decisions. It's absolutely essential that you get to a point where you feel confident enough to be able to read the markets, understand what's going on, and feel confident enough to make decisions based on your overview. What we don't want to do and what we want to avoid is placing ourselves in a situation where we need to follow the choices and decisions of others. To be in control of your own destiny, you need to be in the driving seat. And that is really what you need to focus on getting yourself to or in terms of the position you need to get yourself to. Achieving this goal starts with becoming adept at the use and application of technical analysis. If you can get to that point, technical analysis will allow you to understand market conditions and formulate an opinion. Most importantly, it will be your own opinion on the future direction of price. And hopefully you can, at least at this stage, appreciate the relative importance of this last statement. If you just think back about topics that we perhaps looked at last week, where we focused in webinar 7, looking at combining trend analysis in terms of establishing a direction, then applying the slope of the moving average, for example, to provide additional reinforcing evidence or a further input in terms of reading the direction of the trend, coming to a conclusion as to what the direction of the trend is based on that approach, and then using a momentum oscillator and identifying firstly the direction of the trend and establishing whether you'll be using overbought or oversold readings to fine-tune the timing element of your decision-making process. By just taking those 3 components, if we look back at this last statement, that technical analysis strategy has firstly allowed you to understand market conditions, allowed you to formulate your own opinion, and then allowed you to take on board that opinion and execute a trading plan. Very important that you feel comfortable enough that you've arrived at this point. So it is very important then that you develop skills that allow you to plan the trade and trade the plan. Simply an extension of the example that we just gave. So let's, for example, just as an illustration, look at this chart. We can very clearly see that the trend is up. We've drawn a channel. We've highlighted a period of consolidation or sideways move, and then the market has moved up. What you need to do initially is ask yourself a number of questions. What does my trend analysis tell me? Becoming adept with technical analysis and understanding some of the topics that we've covered in the course thus far about trends places you in a strong position to be able to answer this question. We can then go ahead and employ the tools that you usually use to analyze the market. And then, most importantly, that will get you to a point where at this stage, if this is the current price action, help you answer the third question: are you able to make any decisions today? In other words, does this market offer a buying opportunity because the trend is up? Or alternatively, if for whatever reason you are concerned that the market is unable to continue or will find it difficult to continue to move in an upward direction, and your view is that this market provides potentially a stronger selling opportunity. Are you able to make any decisions around that today? Or if not, do I continue monitoring it, looking for selling opportunities? This is what technical analysis will allow you to do in terms of being able to put you in the driving seat, make your own decisions about the market. And it's very important that you're able to make your own decisions and understand the decisions that you've made, because then if markets do go against you, you'll be better placed to more effectively manage that, to minimize the losses that you may incur in that particular trade decision. You might want to think about it in another way. And this was something that I was told when I first started trading in the financial markets many years ago. There is nothing wrong with being wrong in the market as long as you understand why you are wrong. If you're making your own decisions, you're in a position to be able to evaluate that. If you've based your decision on somebody else's choices, you have no ability to manage it if it starts to go wrong. Okay, so just to extend that discussion, and we're looking at the same chart, what we can see we've already assessed that the trend is clearly up. We can evaluate the most recent price action, and we can see that the market has pulled back to a moving average that we are using, just extending the discussion that we looked at last week. Does that potentially offer a buying opportunity because the trend is up? Remember, we're looking to trade the trend. If we apply our momentum oscillator, we can see that recently the momentum oscillator was just off a reading below 30%. Whether we deem that to be an important development in terms of offering a buying opportunity, we'll assess accordingly. But we're able to make a decision as to whether we have enough evidence in front of us to execute a long position. If we do, we can then go ahead with determining when we'll look to take that trade. If we don't feel comfortable enough that we do not have enough information, we can then step back, be patient, and wait for the opportunity that will present itself. This is the disciplined approach to using technical analysis, but it also means that you are making your own decisions in the market. Okay, so let's now move our discussion on to fundamental analysis. Unless you have trained as an economist or you have a very strong understanding of economics, as retail traders, we also experience limitations applying fundamental factors to markets. However, this is not all bad news. There are ways in which we can tackle this issue. Simply reading, and more reading. If you read the financial press, such as the Financial Times, Wall Street Journal, The Economist, just to name a few, you're able to also find endless comments and overviews on the internet that provide free access to opinions, fundamental related opinions that exist in the market, even in terms of some financial related channels such as CNBC. You will be able to get to grips with the news the market is focused on. By gaining a little bit of experience in financial markets and doing a little bit of research in terms of what are the key data releases, what are the key elements that drive markets, you will be able to get a broader understanding of what items the market focuses on. So for example, if you have come across a monthly release out of the US, which is the employment report, or more commonly known as the non-farm payrolls, and you have an understanding of what this data release is about, and traditionally what kind of an impact it has on the market, you'll appreciate the fact that this is probably one of the most important releases on a monthly basis that comes out of the US. You will then be able to understand whether a strong number or a weak number comes out and what the implications are for the market. The financial press or financial television stations will constantly have a focus on various and current, or rather current and future fundamental developments that the market is focusing on. So simply by keeping abreast of the news, you'll be able to have a good understanding of what the market is thinking. Think about this in terms of being a technical trader. Your technical analysis is allowing you to make trading decisions and come to the conclusions about the market. What you can then do is evaluate what is going on in the market to see whether the underlying fundamentals agree with you. So for example, if you have gone long the oil market and based on your technical readings, and then you read either the following day or you're aware of a current story that OPEC is cutting back production. You know that a scaling back of production will most likely lead to a rise in prices. Therefore, that fundamental overview that will impact the market at this point in time agrees with the conclusions that you've arrived at from a technical perspective. You can then come to the conclusion that both the fundamental and the technical analysis are in agreement, and that gives you a greater degree of confidence against the decision that you've made. What we are looking at in terms of identifying is what the market is focusing on, because that is what traders are basing their decisions on. If you can get an understanding of these by simply keeping abreast of the news, this will provide you with an understanding of essentially what is driving the markets. And from a fundamental perspective, for individuals in the retail sector, this is a very strong position to be in. And you've managed to overcome some of the limitations and the obstacles that we as retail traders face. Remember, it's very important to be able to understand what's going on fundamentally, if we use the jargon, because the fundamentals are what ultimately drives the market. So, to give an example of just some illustrations taken out of various, be it either the internet or various financial press headlines, you see a statement such as sterling goes down, bonds rise, Bank of England cuts inflation and growth forecast. You can then go into the article. The article will evaluate what has happened in the market, and you will have an understanding of what the market is currently focusing on relative to these issues and the impact that it is having on the pound. Wall Street rises with healthcare rally after Trump's speech. If your technicals are telling you that the Dow Jones Industrial Average or the S&P 500 is moving higher and you are long, well, then you feel encouraged by this headline, because you'll be aware at the time that the speech by the White House administration relating to healthcare came out, and the market took that as a bullish cue. From a dollar perspective, as an illustration, enough is enough. The dollar rally loses momentum. Go in, you read the story, it explains what the focus is on. You're looking at your own technicals. Do they agree or do they disagree? Remember, if your technicals are telling you to buy the dollar, you don't then go and sell, and you are a technical trader, you don't then go and sell the dollar simply because you read this headline. Your technicals are your decision-making process. Staying abreast of the fundamentals is the attempt to understand what the market is focusing on and what is driving the market. Oil prices rise as Trump quits Iran nuclear deal. Most of you will be familiar with this development quite recently and the impact that it potentially would have had on oil prices is clearly stated in this particular headline. What do your technicals say? If they're in agreement, then perhaps you should be considering going long oil or crude oil. The Wall Street report, US stocks, bonds rise, dollar slips amid soft inflation data. This is a summary of the key impacts on key areas of the financial marketplace across various asset classes. And then finally, a global market overview, something that you'll very commonly find in the financial press. A dollar retreats after tame US inflation reading. Again, if your focus has been on the dollar, this story will be of interest to you because it is a reflection on what has driven over the course of the day or over the course of the recent activity, the movements in the US dollar. So if we come back to the same chart that we looked at earlier, we're asking ourselves, what is the underlying trend? We came to the conclusion that the trend is up. We've highlighted a certain area in the chart. This is obviously current conditions. We saw earlier that the market had pulled back to the moving average. Does that pullback represent a buying opportunity? Because we're looking to trade in the direction of the trend. We noticed too that the momentum oscillator had traded, or rather had printed, a level very close to 30%, i.e. oversold. Does that then give us enough of a reason to consider a buying opportunity against the backdrop of this recent pullback in the direction of the underlying trend? We then have to ask ourselves, let's assume that we do take the trade, what the key fundamental factors are that have driven this trend. Okay, or if we're just evaluating the overall broader condition. For those of you who have an understanding of what has driven stock markets since the financial crisis, and specifically since the 2008-2009 lows, you'll all be aware that we've had almost a decade-long, clear, very strong bull trend in equity markets. One of the key drivers for this is a low interest rate environment. It left the market with very few opportunities in terms of where to place investments, and the conclusion was that the stock market was the best place to park your money. These low interest rate environments are still with us today. However, as of the last perhaps 3 to 5 month period, the market has begun to reassess the medium to longer term impact, or rather the current levels of interest rates and whether they may indeed be going up. This has caused perhaps a slight shift in market sentiment from a broader perspective. That is just simply providing a bit of a backdrop to the underlying market conditions, which are also relevant at the time of this webinar. You then have to ask yourself, okay, if low interest rates have driven prices higher, has anything changed? I just alluded to that possibility that perhaps indeed this is the case. Interest rates are currently going up in the US, and as a result, volatility has increased. Now, does this prevent you from taking a long position in the S&P because the trend is still clearly up? It shouldn't. However, once you do take that long position, you understand and you are of the opinion that perhaps the current trade, at least at this stage, should potentially be deemed to be slightly more risky than perhaps long trades over the past few years in this particular market. If interest rates continue to go up, we clearly are seeing a very different market dynamic that has existed for the past 10 or so years, which have resulted in the equity markets sustaining this long-term rally. Technicals still tell you to buy the market. You may say to yourself, okay, I'm happy to take a long position. My risk parameter, as always, is absolutely key. And if I see markets move below this level, then I need to close the position. Or if this is deemed to be a medium to long-term trade, you may say to yourself, even if the markets do move lower, I won't close the position. What I want to also see is the slope of the moving average start to point in a downward manner, i.e. a negative slope, which would then suggest that the trend is indeed down. Under those conditions, if I see a sequence of lower lows and lower highs in price action, as well as a negative sloping moving average, then that will tell me long positions are no longer viable. So your technical decision-making process still takes precedence, but you have an understanding of the market conditions. Now, you may be asking yourself, well, we're looking at a very long-term chart over here. How do I apply this in the short-term environment? If I only look at trading foreign exchange markets, for example, and I prefer to trade intraday price action, the logic is exactly the same. If you can establish the trend direction, establish the decision-making process that you will apply with respect to that trend, then by understanding the fundamentals, you have a more informed overview of what you're dealing with in the market. If your technical conditions change, then that will lead you to make a change in your decision making. Okay, so I think we have enough information, at least, that, or topics that we've discussed thus far in this webinar, to understand why it is important that we define ourselves as a technical or fundamental trader. It is in your best interests to employ both technical and fundamental analysis. As I stressed earlier, though, and just to recap on a few points, you need to decide and determine which approach is the dominant decision maker. Is it technicals or is it fundamentals? It is likely, because of the limitations that most of us face, that we will be technical traders. This simply means that you will base your decisions on the use of technical analysis. Technical analysis allows you to be in the driving seat, allows you to make your own decisions. You need to avoid, as we stressed earlier, being placed in a position where you are forced to act on the decisions of others. So, by being technical traders, this simply means that our trading decisions will be based on what we observe in price and in our analysis of price. The fundamental analysis and an understanding of it will provide either reinforcing or opposing evidence of the technical decisions we have made. We saw one or two examples where we illustrated situations where the technicals and the fundamentals disagree. Where they agree. There could be instances where they disagree. However, you need to go back to your technical analysis and you have to say, is this still a viable trade? At some point in time, the fundamentals can change to facilitate the clear understanding and also reinforce the underlying technical reasoning that you've made. So, to come to, let's say, a conclusion, at least at this stage, what we're suggesting you get yourselves to in terms of the position is to be able to evaluate the relationship between the trend outlook as a technical analyst and then understanding the fundamental backdrop that is driving the markets. And this is how you can combine both technicals and fundamental analysis, but by being principally a technical trader.